Okay, this is going to be a video chart on Human Genome Sciences Incorporated, ticker HGSI. Biotech stock. We've seen some huge moves in biotech stocks lately due to a number of factors. Seasonally, January is always a strong month for biotechs. There's a lot of conferences that go on featuring, these new tests that these companies are doing and clinical trials and whatnot. But the main reason, in our opinion, that you've seen such big moves in biotechs this week is Inhibitex Incorporated, INHX, got bought out by Bristol Myers for like $25 a share after it was trading at $9 a share. So obviously anybody who was in INHX coming into the week on Friday made over 100%. So anytime you get a move like that, people turn their attention to the entire sector. DNDN is another reason. Dendrion made just a huge jump last week from $7 now all the way up to $14, so up 100%. So the biotech space is just smoking hot right now. So that's the reason we wanted to focus on HGSI, because today it rose 18% and really came to life. Now, we're going to kind of work backwards here on HGSI. We're first going to look at a long-term chart. What you're looking at right now is a 5-year monthly chart on HGSI. So each candle represents 1 month worth of price action dating back to 2007. So you can see that the stock has a history of making gigantic runs and gigantic falls. From 2009 through the middle of 2010, HGSI went from $2.20 all the way up to a high of $35. So just an insane run, a return of well over 1,400%, I believe. But then coming into 2011, around $27, $30, it then tanked all the way down to $6.50, $7. So a huge drop as well. But what we want to point out here on HGSI is that after month and month and month of falling, this is the first month where the trend is potentially reversing. You can see 1, 2, 3, 4, 5, 6, 7, 8 months of declining action in HGSI. However, and there's still a lot of time left in this month, but with December's close around 7:30 and the stock currently around 9:45, it's looking like the trend might be reversing finally. And you can see this downtrend line that we have here connecting these lower highs is right around $10 for this mark. And the other thing we want to point out is we're only 1.5 weeks into this month, and the volume is already at 65 million shares. Last month, the volume traded 127 million, so we still have 2.5 weeks to go, and we're already halfway to last month's volume. So this is a good sign overall. The chart looks like it has potentially bottomed, and you now have some clear levels to trade against. So now we're going to look at the daily chart. We're looking at a 50-day chart here. And you can see that after a long period of consolidation between the 650 level just about and the 780 level, the stock finally managed to break out on very good volume too. You can see this breakout above 780. And then that high was now going to be resistance, the new high that it set after it broke 780. And that high of 841 obviously got tackled today. and the chart just exploded. So now you've got a nice uptrend line that you can draw connecting these higher lows, and we can watch this trend line moving forward. So what do you want to watch for now with the stock uptrending to signal that there's going to be some continuation to the move? Well, what we notice is the volume today is the highest volume on an up day since October 18th. And on that day, the price was around $12. So the price being even lower now makes for a better attractive entry to everybody who's on the sidelines, you know, psychologically. They can get in at $9.50 now instead of having been able to get in at $13 back in October. So now we would like to see prior resistance. So again, that high yesterday of 840 act now as support. So any pullbacks you see in the stock that hold above the 840 level, we would consider those a nice entry to get long. And really that's about a pullback of 11% or so. So that would be a healthy pullback, because remember, this stock has come from 650. So we're talking about a 11% pullback after a 40% move from 650 up to 950. So that's the first thing, is that support right here on a daily basis. As for resistance, there's a couple levels to watch just looking at this daily chart. The one that's farthest away at the moment is going to be the base of this gap down. You see this gap down here from October 25th to October 26th on very high volume. So there's a lot of people stuck there. So therefore, we definitely have resistance from 1118, which was the high from the gap down, to the base around 1275. So a wide gap down. But from 950, there's definitely some room to run before we deal with that resistance. So really simply, you're just going to want to watch today's high of 956. The stock closed right near the high of the day on extremely good volume. So in our opinion, the high of the day tomorrow should break 956 and test that $10 level. We're also going to say that there is resistance at $10 for mainly the psychological reason, but also if you look here after this gap down, if you look here, then when the stock pulled back and consolidated, you see here this little congestion from the beginning of November to the middle of November. It really had a hard time getting above $10. But the main thing we want to note about that is, with the exception of this day here on the 2nd and the gap down day, obviously, which we've already addressed, the volume is generally really low in comparison to today. So therefore, there's not as much resistance at $10 as there's going to be approaching this gap around 1115, 1120, all the way up to 1275. Now, breaking it down into an even shorter term basis, you're looking at a 15-minute chart of the last 3 days. Now you can see here just a huge up move to start the day today, and it's been showing you the potential for these big moves in the volume. The volume was showing that it wanted to go higher. What do I mean by that? The green volume bars represent more demand than supply. The red volume bars represent that there was more supply than demand during those 15-minute periods. So you can see, what do we have more of and which ones are higher? Well, the green volume bars look to be in abundance to me, and they're much higher. So that is an indication that there is more demand than there is supply. You see here, you can see it from this would have been Monday. Monday's open, high volume, and then pulled back on lower volume, and then, you know, there was some high volume here, but washed it out the next day. And then today, just everybody who sold here and here got completely washed out by all this volume. 21 million shares or so traded today, I believe. Yeah, 21 million. The stock traded 8 million, 12 million, 7 million. So it traded 21 million shares today. It's traded a total of about 25, 27 million the last 3 days total. So a lot of would-be sellers got wiped out by today's volume. Today's volume, we can't stress enough, it's very impressive because it signifies a lot of demand, and the price reacted well, up 18%. Now, looking even longer here, if we look at a 1-year daily chart, things are getting interesting because there's obviously a downtrend that's been going on for a very long time, as we noted. But if you take this high here and connect the next high, and we'll draw this as a red line, since it was clearly, you can see that from that high was in May, and then this high, which was in the middle of May, and then here you can see all throughout June and July, this trend line clearly acted as resistance. And when it got tested, look, the volume was low. Each time it got tested, the volume was low. Volume was low in June when it was getting tested. Volume was low in July when it was getting tested. Then when it started to really break down from it, that's when you had the high volume and it came in on the downside. Here you had good volume when it did its test, but then you had the gap down less than 2 weeks later. So it negated that entire attempt. But now, look what we had today. Nice, solid breakout above this trend line here with high volume. So this has been in the works for a long time, and it looks as if HGSI has finally broken one of the major downtrends. Now, there is another downtrend line, though, and that would be from this high here, the one in the middle of May, and then if you connect these three highs here, and then you even have a fourth one here. So overall, you're still in a downtrend. We've broken one of the downtrends, but we haven't broken all of them. But again, this price is around $13.90. Tomorrow it'll be $13.48, $13.50. So if you go out to January 19th, the price will be around $13.30. So the point we're trying to make is that, yes, there's still definitely resistance on this chart, but it looks as if you have a bottom in place. Volume has confirmed the move that we saw today, and resistance is a solid 20% away from the current price. So there's still a lot of room to work with here. And like we noted on DNDN in our video chart last week, once you see these really high volume days, the stock can really get up and go the next couple days. Now, we're not saying HGSI is going to do what DNDN did and go up 100% between now and next week, but we're merely showing that we're in the biotech space. You have all of these people who just saw what DNDN did, and a lot of them probably missed out. Some of them might have been late to the party. So now they're going to be looking for the next biotech stock that can make a nice move as well. Not necessarily replicate and repeat what DNDN did, but what biotech stock is likely to be in focus from the big funds who cause these runs up. And judging by the 21 million shares traded today, there was definitely a lot of money floating around HGSI. And lastly, because the price has dropped from $27 all the way down here, and we showed you on the monthly chart that the stock has made a historically big run before, people remember this. And they can look and they can say, okay, it used to be at $20, $25. Now, we don't think this thing's getting to $20, $25 anytime soon. But again, just dealing with psychology, they can see the stock has dropped a long way, and if it looks like a major bottom is in, a lot of people will get behind this and cause a further run up. So the takeaway here, watch that prior high of 840 for support, and watch the 956 high from today for initial resistance, then $10, and then we're going to target this gap up, this gap down, the base of this gap down around 1120. And above that, we still have our downtrend line that we showed you, which was around 1390 and looking to be around 1320 in the coming weeks. So again, HGSI, definitely keep this one on your radar, and we invite any viewers to check us out at www.stockhaven.com, where we trade stocks like this all the time. We caught DNDN at $9, and we caught HGSI this morning as it was breaking the 850 level, and it's turned out to be a great play. We've got a lot of traders hanging out in our live day trader chat room, so join us. Again, www.stockhaven.com. Thank you.